Right, let's go. Okay. One of the markets that interests me the most is this oil, because we are sitting on 22 lows right now, literally as we speak. I traded this up to the highs, and highs of today. I got out around about 71, close to 72. I can't remember. Anyway, I took 100 pips out of it. It looks to me as if it needs to come back into about 68. So my target entry for that will ideally be 68. So it's Independence Day tomorrow, OPEC meet Wednesday, and then US monthly jobs on Friday. So let's just stay with commodities. Let's look at gold. Yeah, see, gold can't get above this 20-day average. Any market that can't get above a 20-day average is potentially ready to take a further leap to the downside. Bear in mind, we've come off 2075, and this has not recovered at the moment. It has reconnected with key support, but we are flat going into Independence Day. Any push close to 1900 would see me buying again, purely because we're coming off of this huge support at 1894.95. Okay, let's look at the dollar. Dollar index is equally sitting on a key area with monthly jobs on Friday. So at the moment, the path of least resistance, I have to say at the moment it's up because there's huge support here. We had a push from 101.50 into 103. So if we hold this 20-day average and that support line, then I can see that pushing up higher into that trend line resistance. So let's look at the euro and the pound. Euro, whoops. I would have to say that looks higher. But we are, close to 101, aren't we? Well, that's holding the 20-day average. So if that stays above that level, as long as we don't close underneath there, I would say the path of least resistance is higher because we are sitting on that 20-day average. It would look to me as if we could go back to those highs. If we go back to those highs and fail, this could roll over big time. So I'm bullish at this stage. Let's look at the pound. Yeah, so we're poised. It's a short week with an important end to it. So right, let's look at the indices now. Dow sitting. This is a key level of resistance up here. We were up here in mid-January, mid-Feb, early May, and mid-June. So I tell you what, if we path of least resistance is up, we reconnect with that 34,000. I think that could go higher. So with these indices, with this Dow in particular, I think a pullback into 34,000, 34,150 would see me buy that. So we're going into Independence Day flat. So I would hope it would get a lot of volatility and fall back into this area here and hold. Then I think we can go back to 22 highs. 22 highs are up there at 34K. So let's have a look at the NASDAQ. What the NASDAQ does, the rest of the market follows. Yeah, so NASDAQ is right at 20, right at this March 22 resistance, sitting, nudging right up there. Now, when we failed there in March 22, we dropped pretty hard. I think there's a decent chance we could go up to this 16,600 and get back up to 22 highs. So I think, again, pullbacks into 15,000 are viable on that one, with the view to that going back to those highs. S&Ps, let's look at the FTSE in a minute. Similar, right, let's go to the FTSE. FTSE has closed underneath this trend line. I think this is lower. I would like to short a bit higher up there, close to 7,600 or even higher. If we get a move into 7,700, I will be looking to get short on the FTSE. However, if we start closing lower tomorrow, this could be it. So we've broken down here on the 22nd, punching back into the underside of that. So I think that is lower. Right, let's look at, let's take a look at more commodities, and then we'll move into stocks. The wheat, great. So just as the FTSE is on the underside of the trend line, this wheat is potentially coming back into 640. So we're 650 nearly, just under. I'd love to see this go into 640, at which point I would jump back in again. Because I think the wheat is heading back to $10 plus. So I would buy a pullback on that one. If we close under the 640, I would leave it alone for short term. Let's look at copper. I think this recent, look at with that recent test of the trend line down there, 82 was viable. Right, 83.70. So if we pull back into 82.40, I think that is viable, and I think we're going back to 93 plus, and potentially back up to 10,800 on the copper. Coffee. I think that watch out for that 15,400 low, this big dark line here at 15,400. I think that is viable. To come down there and hold, I'm in on the coffee. I'm just a huge fan of commodities. I think we're in a commodity super cycle. Nickel. Okay, leaving that one. Orange juice. Any test at 24, I think that's viable. Right, so we'll last look at silver and then we'll move on. So that's not silver, hang on. This is silver. Yeah, so that 22.25 has got bought. I think this is a three-wave pullback, because if you look at we had a big 1, 2, 3 wave into here, but we fell right back to the 3-wave retrace right back into that breakup area in March, April. Did another huge move. So I think this is a 3-wave correction from that move. So I think any pullback closer to 22.25, 22.50 is potentially viable, but then we need to break out and close above 24. If we do that, bear in mind what I just said about my commodity boom thinking. I think this silver is going to go to 33 plus. I think that is going to break out of that. And I think that's a bull flag. If we can close above 23.50, that's going to pop. Right, stocks. Let's start with UK housing, because I think when you go into recession, housing tends to be the first. And look at this horrible chart. This is Taylor Woodrow. These guys are really struggling. Any push into 115, I think that's lower. So I think the only thing that's going to save housing is if the US start to reduce their interest rates, which a lot of people believe the US has peaked on interest rates. Hence the reason why the US is so much stronger at the moment to the UK, because the belief is that inflation in the UK is far more stubborn. So you can see this 127, 130 is huge resistance area. If we tap into 107, 110 and fail, I think that's coming back to these September lows. But close above 107, I think we can go into higher 130 plus. Barrett's, yeah, very similar. Persimmon, wow, that's made a new low. It's even broken the 22 lows. And the volume suggests that's not even going to hold. So this is a red flag for me, a huge red flag. If this housing stock can't hold up, then this market, the UK market, is not going to hold up. Let's look at UK retailers. At the moment, they are clinging on. And look all the red on Tesco. This is Tesco. Look at the red on there. If that knocks into 250, 260 and fails, I can see that coming lower. It's a decent move on volume off of this 247 support. So, yeah, if we close higher here on Tesco, then I think we can potentially go back to £3. But I think all we're doing is peeling back into these drops. Sainsbury's, right? But look how thin the volume is. It's sitting up, but the volumes are very low. Let's look at Boo. Yuck. It's dropping on volume. ASOS have allegedly just gone back in profit. I mean, these are sick charts. I mean, last year this was 25 quid, or now £3.75. So be warning. Even Shoe Zone's coming off. It's had a hard drop on the 16th. WH Smith's, I'll flick through, looks lower to me. ABF, that's bucking the trend, but it's only gone back into that 25th of April drop zone. What else are we going to look at? Right, let's look at anything you want me to look at, then start shouting. So we looked at housing, retail. Let's look at banks. I want to look at Lloyd's. That is at the moment looking higher. But we're not, look at this, even after this bounce, we can't close above the 20-day average. So if we turn around and start closing underneath 43, that's lower. we're coming up on lower volume. So I think Lloyd's doesn't look sustainable to me. We're coming up on lower volume. So that's very divergent. Barclays. It's retracing after a decent drop. I mean, the price down here, 140, 142 was good. If we close above 160, I can see they're getting higher, but that's a lot of resistance up there. I think the trick is to do, but in this environment, is to have shorter targets. If you're buying these lows off this support, I would personally have shorter targets, but I mean that's my style of trading, and that's my attitude towards what markets are doing today. Legal and general, bumping along. Right, let's go across to basic materials, because this is a sector I like. Lamentis. That's gone right back to the breakup area, November 22. I think that's viable. There's higher closes on volume. Look at miners in a minute. Man Group. Volume's not bad. Last time we were here and started closing higher in January, we went all the way up to 290 plus. I think that's boomerang right back to the break area. I think that could be on the way to a higher number. I like Man Group. I think it's TPI cap. Keep an eye on this one. It looks lower at the moment, but if the volume picks up on that one, I'm going to get into TPI cap. Let's look at Rio. So we're getting bounces in these stocks, but bear in mind we're just hitting the quiet July period as well. Services, no, don't want to see that. Chimring. Let's look at Tullow. Move across to energy. Tullow. I've been talking about Tullow for a while now. I think this Tullow is going to pick up. I'm bullish on the oil. So if that Tullow breaks above this resistance, I can see that getting back to 33 plus. Volumes are holding up. We're above the 20-day average. We're making higher highs here at the moment. That is, we've got, it is congested there. I think that could at least do 35 plus on Tullow. We're 28, 29 at the moment. Let's look at some other energy stocks. I guess. Ooh. That's looking a bit sick down there. Very speculative stock. So GKP. That was a buy signal on Friday. New low, immediate close above. Volume is better, not brilliant. If that comes back into 118, I think GKP is a buy. It looks okay. So look at the big boys. BP. Whoa. Very sweet move on BP on volume. That looks as if that is at 460, 465. I think BP is viable. So commodity related and energy related is good for me. I think anything to do with retail, banks, services, all looks in trouble to me, and housing just looks dire. So be very careful, because I think housing is telling us something. Miners, ooh, yuck. No, that's Griffin. Pan-African. If that holds above 13, I think Pan-African is a buy again. I think Pan-African's worth getting back in. And Sylvania. No. Right, let's look at you're very quiet. Anything else you want me to look at? Let me just go across. Right, I'm going to leave it there actually. Let's look at a couple of US stocks. So US tech has really had a huge bounce. PLTR, that's gone from 6 to 15 bucks. Wow. What else? Let's have a look at TWOU. Ooh. Nope. Not at the moment. Keep an eye on that one. Twillo. That's had a good run. You got a question? Anybody got a question? Uber. Uber's had a great run. MU. Okay. I'm going to leave it there. So I'm just very cautious at this stage. Not engaging this market, just giving this market a bit more time. Ooh, oil's dropped close to 70 bucks. Okay. Brilliant. All right. Thanks for joining me, guys. I will send out the recording and I will update you second half of the week once we get Independence Day out of the way and market shapes up to take a look at US jobs on Friday. Brilliant. Thanks a lot. Have fun.